Hello once again, thank you for joining me. It is late night, January 6th, and I've been trying to work on my 10-minute gold wave model because I really think that that is one of the mid-range wonders to the portfolio that are really good at swing trades. So I want to kind of explain that to you and what I'm seeing and how it ties out to the low for January 10th and 13th, and then the major peak, I believe, around January 31st. Thank you again for joining me for an brschultzSP500 stock market timing episode. If you sincerely enjoy my work and want to donate, feel free to use the PayPal link down below this video in the YouTube channel, or you can scan these QR codes. Thank you for joining me today. So this is the bottom model for the gold wave. You can see the 1, 2, 3 in white for the bottom that occurred on roughly December 19th, early December 20th. And you can also see that I don't really understand where the bottom for the market came in on January 2nd for this one. So still have yet to find that one. So I'm not really sure why that came in, so to speak, without detection. So maybe there's something I have yet to learn or discover about the model. But from this standpoint, it picked out 2 buy points. It picked out the bottom again around December 19th, 20th, and it's picking out a bottom around January 10th, 13th. So again, I'm looking for January 10th or 13th for a major bottom markets, and then I believe that markets are going to have the possibility, have a decent possibility to have a very strong ride into the end of the month. So let's jump to the peak models. So here's the peak model for the gold wave. You can see a 1, 2, 3 in white going out to January 6th roughly. So that's, if you flip between the models, you can see why I believe that the bottom was around December 20th, and then we would peak around January 6th. Looking at markets, the highs of the 2 dates of December 24th, 26th, and today's high are very similar. So that could be why the model picked it that way. Just thinking out loud, the SP500 USD hit 60.60 on around Christmas, and then it hit 60.30 today. So maybe it's possible that that is part of the cycle. So I know some people are wondering why that happened. Sometimes cycles are different on different scales. So for whatever reason, it projected that the bottom was around December 20th or whatever, and then the peak of that cycle would fall here at January 6th roughly. So, or late day January 3rd, January 6th. On this time frame, it's more like plus or minus a day and a half, right? It gets pretty hard to understand exactly precisely what day this is picking. So that's why you have to drill down by the 5-minute scale. But from the 10-minute model, obviously it'd be pretty sweet to be able to have, like, this is almost like a weekly model, right? Because the data goes all the way back to June, right? So that's pretty nice. So this is almost like a weekly model. So that's why I really feel like the 10-minute model is a really nice bridge. But nonetheless, assuming that the gold wave continues to act as it has been around 0.3 and 4 in black, that would give you the January 31st / early or first business day of February as the peak in markets. So again, this cycle is very interesting. It's the way the model projected it. It's the way the model lays it out. Is it projected that the cycle bottom, this mid-range type cycle would bottom around December 19th to 20th, and then it would find its peak at the end of the cycle around January 6th, 3rd or 6th. So was the high and the low within the correct order? Yes, they were. I mean, the low for December 20th was 58.25. Today's high was 60.30. So that was the full breadth of the move up, if you will. It was just spaced out quite a bit, right? So not exactly as you'd want to see it. but from a choppy market standpoint, maybe that is, and in terms of cycles and math, maybe that is correct. So that's one thing to understand in choppy markets, how the model works, right? And from a very choppy market standpoint, in my mind, this would be acceptable. If you have a long-term choppy market and it says the bottom is, when it first falls off a cliff, it bottoms and then it goes sideways, let's say for a week or two, like it did, and then it hits some kind of peak, and then we were to break down again. I guess it's a cycle. So trying to understand the math behind it is sometimes makes you stretch your thinking a little bit. But nonetheless, the next bottom that the model is picking is around January 10th or 13th, and then it projecting that there should be a peak around January 31st or February 3rd. Now this is interesting to me because the zigzag model on my blog, my WordPress site for brschultzgoldwave.wordpress.com, the zigzag is completely sold off. So even with these bursts of strength for a couple of days, it hasn't made the model switch directions or pop upwards. It's still in the oversold position, and so this makes me wonder if we either rocket hard into the end of the month, have a nice strong finish to January, or do we do this kind of sideways move again like we saw with December 19th or 20th into January 6th, right? Is it just a sideways chopping motion? And that I don't know. I don't have the full explanation. As you know, the prescription has been, the forecast has been that markets would be volatile into the March 21st roughly bottom for markets. And again, I'm saying March 21st here and January 6th. So if it occurs right around March 21st is the major bottom for markets, then the model did a wonderful job of calling that way in advance. And again, that was the weekly model if you want to go back and look at the weekly video for that. But in a nutshell, just trying to explain everything to you how I perceive it, because a lot of people have questions when the cycles go sideways. It can be very confusing. It kind of gets everyone confused, and but I guess from a mid-range standpoint, a cycle could travel in a range for quite some time and then end at the peak of the range, right? And then reset, so to speak. So, and I think that's what it's trying to do, because obviously it's saying that there's some type of major low coming up that's a major bottom, right? And then a new cycle begins and then ends at the end of January. So hopefully it's not just a lot more chop. Hopefully we get some type of rocket pop in markets. So either way, if I see something different, I will let you know. But this gives me confidence, I think, in that end of January peak, that the Federal Reserve Algo video that I just created previously also picks roughly January 31st for the peak in markets. So that's what I've got today, and that's what I'm seeing. So I'm getting a lot of confirmations for some type of cyclical peak at the end of January, first trading day, business day of February 2025. So trying to call them before they all happen. I might be off a little bit. Hopefully today's peak holds. Well, I guess it's 6 o'clock right now, so well, I guess we'll see what happens here. But the model did predict some type of strength peak around January 3rd, plus or minus a business day, so it fell within the window. And yeah, so I think the forecasting is going pretty good, and hopefully the gold wave really delivers some great results, right? Because in a very strong upward market, this type of setup that you're seeing with the black 1, 2, 3, 4 and the white 1, 2, 3, 4, I think you'd have a really strong run up in markets into the peak dates. So yeah, so I'm impressed with the results, and hopefully it keeps getting better and better. And hopefully 2025 is an epic year for the stock market timing model for these markets. So thank you for joining me tonight. Please share my work. Please subscribe. And please hit the like button. Feel free to comment if you want to in the comment section. I'd appreciate it. I'm sure other people would too. And, you know, maybe if I reach like 5,000 subscriptions, 7,000 subscriptions, 10,000 subscriptions, somewhere, you know, somewhere way up there, maybe then I'll create a Discord channel again, you know, once we get enough people interested in it. So that's my wife calling, so I better let go here and grab the phone call. So I'll catch you later. Thank you so much. Bye. And again, this model was also picking right around the March 21st, 24th bottom for markets for the major low with a zigzag, a 1, 2, 3 touch point, brschultzSP500 systematic way of timing markets with a zigzag. And then this is the macro peak for December of 2027. So in a nutshell, in under 10 minutes, maybe near 5 actually, you've got the complete rundown from the macro to the micro to the micro to the macro. All right, race fans, I'll catch you later. Bye. So hopefully you've enjoyed my show today. Warning, this is all forecast use only. Come here. You want to read this for me? What does that say? Forecast?
Forecast.
Use?
Use only.
Only. Right. And what's this say?
Warning.
Disclaimer.
Disclaimer. I am not
A licensed investment professional. That's Latin. So say caveat emptor.
Caveat emptor.
Seek professional advice prior to investing. Investing bears risk
of
financial
loss.
Very good. And so basically this is saying if you ever try to invest in stocks or anything else, you could lose money. Warning, warning, warning. And all my graphs are subject to change. And not all the results are not always the same. Yeah. Thank you for reading for me.
You're welcome.
And that's it for today. I'm B.R. Schultz. Until next time, take care.